Hey everybody, today is Friday the 19th of January 2024 and we're looking at all-time highs in the S&P 500. There's the prior high from 2 years ago, January of 2022, and we have finally breached that. So here are the closing numbers for the week, the month, and the year. We're now positive in most markets. The exceptions, of course, remain the Russell 2000, which lost a little bit more ground this week. Biotechs are still pulling back a little bit. And financials came back a little bit this week, still positive year to date, and energy names are the worst. So let's take a look at these charts. We'll back it up to the 2 time frames. And if you follow me, then you know that I was a little bit cautious here on Wednesday. Thursday, that changed. Thursday, we saw that pattern change from lower highs and lower lows. This is what I put on Twitter saying the pattern of lower highs and lower lows has now changed. We were looking at this market as guilty until proven innocent. Well, this is what makes it innocent, when it makes that higher high above the rising 5-day moving average. And this was our important higher low, which happened to be right at the year-to-date anchored volume weighted average price. From there, we slingshotted forward and are again at new all-time highs. So once those buyers take control, that's your cue to get involved, and that's exactly what I did and what we did for Alphatrends subscribers as well. It remains innocent until proven guilty. We were a little bit cautious but not bearish because the longer term time frame was higher, and that's what matters. It's not about picking the lows of these turning points. In fact, this year we've chosen this as the turning point to get involved, and right here as well. You don't have to buy the dip to make money, and when you buy with the wind at your back, it makes it a lot easier in terms of managing risk. The Russell 2000 I'm sorry, not the Russell 2000, but the NASDAQ, of course, new all-time high here as well. This market, it's 2 days in a row that we've hit that new all-time high on a closing basis, and the trend remains higher. People sometimes wonder, well, what's the price target? What's the upside objective? I don't do price targets. I don't do upside objectives. My job is to say, what is the trend and how do I manage risk for the time frame I'm involved? And when I'm a swing trader, I look at the higher lows above the rising 5-day moving average. So right now, this is the most recent relevant higher low. We got a little bit extended today, so perhaps next week we pull back a little bit. And what I would be hoping we see, market doesn't care what I want, would be for something like this, where we pull back down towards the volume weighted average price anchored to the beginning of this move. And then perhaps we can say, now, then once it starts to move higher again, we can say, there's our higher low, and we can raise our stop from here up to over there. That's the way that I always look at it. If you were participating in the webinar on Wednesday, thank you. I got great feedback for that. That is on YouTube as the recording. And there was a lot of information in there, and we outlined these potential scenarios. We remain cautious at best on the Russell 2000. There are a number of reasons to look at this level as a level of interest, as we pointed out on Wednesday. Also, we have the 50-day moving average. That's that blue line in here. We have a 38.2% retracement of the low from last year to the high right here last year as well. So that's exactly 38.2%. We have the anchored volume weighted average price from the all-time high right in here. So all these things coming together say this is a level of interest. So did I buy there? No, absolutely not. I don't buy the dips. I don't buy the perceived levels of support. Instead, I look to the shorter term time frame. This is the information we'll get rid of in that 5-day moving average on Monday. So on Monday, the 5-day moving average will look like this, even if the rally, if the market continues to rally. So what I'd hope for in the Russell 2000, if we're looking for some kind of retreat, pullback in rally, would be something along the lines of this. If it did that in the next couple of days, and the 5-day moving average held up underneath it, then I would want to buy strength with a stop underneath this low. I don't want to play guessing games down here. My money matters too much to me. I don't like to lose it. I don't like to be in a position of weakness right from the start, guessing whether I'm right or wrong. I've been using the example, because it's been a great example, of Tesla. Tesla is one that a lot of people just think you can buy the dip. They tried to buy the dip to the 20-day moving average at 250-ish or so. This is where what we were looking at, like on the shorter term time frame at 250. It was below a declining 5-day moving average. Here's where we were at the 50-day moving average. It was below a declining 5-day moving average. The 200-day moving average, we were below a declining 5-day moving average. the anchor from the 2023 low. We're still below that declining 5-day moving average. It is guilty until proven innocent. There is no way I'm going to look to buy a stock like Tesla. It doesn't matter what the name of the company is, until I'd much rather pay a higher price, because no one has picked the low yet. Maybe a couple people in here today did. But the fact is, you don't have to buy the low to make money, and you don't have to own Tesla to make money. You might point to Apple and say, well, what about that one? I missed Apple. I really don't care. I didn't buy the 200-day moving average, and I missed this one. What I was looking for, I outlined this on Wednesday as well. I was hoping it would do something like this and then perhaps be a purchase. Again, you don't have to buy those stocks. Instead, buying a stock like NVIDIA right here, which is where I own it. GNK at $16.30. We discussed these. Boston Scientific still long from 56.05 over here. Autodesk as a new trade today. That was a great entry right near the open. I put that on Twitter last night as well. MNDY was a purchase in here today. Twilio, Adobe, these are all stocks. There's still a lot of great looking stocks that are likely to continue to follow through on the upside, and that's exactly what I look for each and every day at alphatrends.net. As you know, or maybe you don't know, I'm running a sale for that. It's a great deal. You get 1 year annual membership to all the videos that I do with the stock ideas. You get a one-on-one half hour with me. You get webinars. We've got a Discord channel that's just started this week and is starting to pick up some popularity. So that's what I offer at alphatrends.net, and it's education, it's money-making opportunities, and risk management. Semiconductors are at new all-time highs. The trend remains super strong in there, powered by a lot of great stocks like NVIDIA, AMD, AMAT. Today, SMCI. I'm not sure it's part of the SMH, but it's kind of associated with that. Huge breakout in there today. There's a lot of opportunities to the upside. If you're shorting stocks, do so in something that below a declining 5-day moving average. But as I've pointed out over and over again on biotechs, I'm not interested in shorting these things just because they're below a declining 5-day moving average. The primary trend remains higher. We're in a longer term uptrend. So instead, I look at it and say the bigger trend is still higher. We're in pullback mode. I'm not going to short this thing. Why not go with where the strength is? I'm not going to short financials. This is exactly why I don't short financials. I was looking at this thinking it would maybe pull back down into this area. Instead, what happens? Well, today it broke higher and continued to squeeze the shorts who were involved there. If the trends aren't aligned, the opportunities aren't low risk, and there's no reason to be involved. Energy names, they continue to be the dogs. If you're going to short something, you short something with a declining 20, 50, 200-day moving average, declining 5-day moving average. Let's take a look quickly at some Ethereum is what I've been talking about in the cryptos. And this one, it looked like maybe it was going to find the buyers back in control right up here. That's the anchor from this recent high on the weekly and daily chart. This is a 20-day moving average that we're holding above right now at that prior resistance. If we fail in here, I would expect a test of the 2200, 2150, 2200 level. That's the anchor from down there. Bitcoin, we saw the introduction of the Bitcoin ETFs, and that was the precise high. It was clearly a case of buy the rumor, sell the news. The news came out and it was sold into. We're pulling back down to the anchored volume weighted average price from the beginning of this move right here. You can see it on the weekly time frame and the daily time frame. So at about 39, 39 and a quarter, 39.50, that's where I think this market is likely to settle down. It doesn't mean I'm going to buy there, but that's a potential level of support to look at. So keep an eye on Bitcoin down in there, but there's no reason to be involved early. Hope you had a great week of trading. If you're viewing this on YouTube, please give it a like, subscribe to the channel, do all that good stuff, and have yourself a good weekend. Thank you.